I want to talk to you about all partnership tax forms you need to file. So here's an overview I want you to pay attention to. So when we talk about IRS tax forms for partnership income, it's important to really understand that we first need to define what a partnership really is, because the thing is that you don't have a partnership at the estate level. You have LLC, you have a S corporation, you have a C corporation, you have all kinds of legal structures. But when it comes to partnership, we really have to delineate really what we're talking about here. So when we talk about partnerships, you have four types of partnerships, as you can see basically on the screen right now. So you have a general partnership, you have limited partnership, you have a limited liability partnership, and you have LLC partnership. So those are really important, especially you have to really pay attention to what kind of partnership you want to have. If you already have a partnership, then you need to have a clear idea about where you actually categorize yourself. Okay, I want to really specify that we're talking about general partnerships, limited partnerships, limited liability partnerships, and LLC partnerships. In some cases, you can even have LLLP, so 3 LPs, okay? So the thing is that you have to understand that when we talk about the partnerships, we need to really delineate the characteristics. So for general partnership, you have equal investment, stakes, and liability. For a limited partnership, you have a general partner who actually bears all the liabilities. For a limited liability partnership, you have protection against debt. This is pretty cool. It's pretty similar to LLC. And for a limited liability company, here you have personal possessions have protection against liabilities. So like any other business entity registered in the U.S., a partnership must also file taxes. However, the taxes of a partnership are passed through to the owners of the partnership. It means what? It means that a partnership is never taxed. Instead, the partners are taxed on their income, and estimated taxes might not be needed. So to file for partnership tax, one has to keep track of several tax forms like Form 1065, Schedule K1, and Form 1040. So it's always a great idea to use a small business tax calculator during the process. And it's also important, if you have no idea what I'm talking about, it's better to just enlist the help of a CPA, an enrolled agent, or a tax attorney to kind of help you out. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Now let's talk about Form 1065. So when we talk about partnership, all the tax forms you need to really be aware of. The first form is Form 1065. As I said before, this form is actually not a form where you actually pay your income taxes. This is an information return, so it's an informational return. So you're telling the IRS, hey, listen, this is how much we have made this year in my partnership. Here is the income, here is the loss, blah, 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 blah. So it's pretty straightforward. And so basically, Form 1065 is filed annually. And when you file Form 1065, you also need to file Schedule K1 along with it, because partnerships and LLCs are pass-through entities. Profit and loss becomes they go through directly to the partners or LLC members, who report and pay taxes on their share of the business income on their personal tax returns. So basically, although a partnership or LLC must file a single IRS Form 1065, the business itself does not pay the income tax. They do not pay this, okay? So who must actually file Form 1065? Well, you have domestic partnerships, you have LLCs classified as partnerships for tax purposes, you have 501(d) nonprofit religious or apostolic organizations. You also have foreign partnerships that had gross income derived from sources in the U.S. And so if you want to find Form 1065, you just can go to the IRS website. They have the latest, the freshest form there. Go to their website. You just need to file. You just need to tap in Form 1065, and it will lead you there. And so when should you actually file this form? Well, you have to actually file the form by March 15th, okay? And this is kind of different from April 15th, which is actually the deadline for Form 1120. So this is straightforward. And so the thing you have to do here is, when we talk about domestic partnerships, we're talking about something that the IRS defines as the relationship between two or more persons who join to carry on a trade or a business, with each person contributing money, property, labor, or skill, and each expecting to share in the profits and losses of the business, whether or not a formal partnership agreement is made, okay? So even if you don't have a formal partnership agreement, you still have a partnership. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about partnership, all tax forms you need to file. So when we talk about Form 1065 instructions, you really need to understand that you want to gather relevant financial documents in IRS forms, and you'll need things like your financial statements, things like receipts that you had during the year, okay? And what you want to do is you have to fill in the IRS Form 1065. It's pretty straightforward. We have another show that actually is actually dedicated to that, so I'm not going to go into too much details here. But the bottom line here I want to say here is that you want to put the tax year you're using, the name of your partnership and mailing address, okay? Filling your principal business activity, principal product or service, and business code number. I mean, pretty straightforward, nothing complicated here. Yeah, and you have to fill in the remainder of IRS form on the third line rather. You have to put things like deductions, income, and tax and payments, and you will need your financial and other tax documents to fill in the appropriate numbers. And again, I'm kind of skipping here because we have an entire show that is dedicated to this topic. What I want to say here is that you need to understand that there are forms that come with there are some schedules that come with with Form 1065. So you have a Schedule B, you have a Schedule M1, you have Schedule K, you have a Schedule M2, you have you also have Schedule C. Okay, but Schedule C is not really part of 1065. It's part of Form 1040, but it really plays an important role when the individual partner is filing his or her tax return. But I was going to say the Schedule L also. So Schedule L, labeled balance sheets per books, is actually it kind of helps you reconcile the balance sheet data that you have on your U.S. GAAP produced balance sheet versus the balance sheet that you are showing the IRS. So the thing is that the federal authority just wants to make sure that those numbers do match, okay? And you have to, when you file a Form 1065, you have to file also Form 1040 Schedule F. If required, you might have to file a Form 8825 if required. You might have to file a Form 1125A, that's for cost of goods sold if required. You might have to file Form 8941 if required. And all other schedules or forms as indicated are based on your completion of Form 1065. Now let's talk about Schedule K1. So we talked about what is Form 1065. Now let's talk about Schedule K1. And so Schedule K1, as you can see on the screen, basically what happens here is that, unlike Form 1065, which reports the financial information about a partnership, what happens with Schedule K1 is that it reports the financial status of the partners. So Schedule K1 is used to register your share if you are one of the partners in the partnership. And so Form K1 is sent to the IRS by the partnership, and it reports your share of income, deduction. You have deductions, liabilities, credits, etc. as a partner. And what happens here is that Schedule K1 is attached to Form 1065. So the partnership is basically given an FYI to the IRS. So basically, according to Schedule K1 instructions, you can keep a copy of Schedule K1 for your record. However, as a partner, the IRS only wants Schedule K1 filed if you are specifically required to do so. So when your partnership files a Schedule K1, your personal information is hidden, and the form only mentions the last 4 digits of your social security number. Okay, so this is kind of cool in terms of privacy here. And one thing I want to say here is that not all LLCs, not all partnerships will file K1s. The IRS may treat an LLC as a partnership, a disregarded entity, or a corporation, depending on the elections made by those within the LLC or within the partnership and the number of members. And so if you have elected to be treated as an S corporation, you may receive Schedule K1 Form 1120S to report owners a pro rata share of income. If you have elected to be treated as a C corporation, no K1 will be filed because taxes are paid at a corporate level, okay? And of course, we have the double taxation elements here. So even though taxes are paid at the corporate level, taxes are also paid at the individual level when the individual is filing his or her personal tax return. And one thing I want to say also is that similar to a partnership, S corporations or S corps file an annual tax return using Form 1120S. The S corporation provides a Schedule K1s that reports each shareholder's share of income, losses, deductions, and credits. And this is really cool. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about partnership, all tax forms you need to file. Now let's talk about Form 1125A. So when we talk about Form 1125A, this is basically a form that is used by business return filers and those who file Form 1065, 1120, and 1120S to calculate and then deduct the cost of goods sold by a corporation or partnership. I spoke about that earlier, right? So this calculation must be separately reported on the return as set on the screen right now, as you can see. So specifically, business entities that produce and or purchase items for sale with the intent to create income are required to accurately report the cost of the items that are sold. So to meet this reporting requirements, a business entity must maintain certain accounting and inventory records. And so personal service companies, let's say doctors, lawyers, painters, carpenters that do not engage in the production or sale of items, or businesses that engage solely in investment or rental activities, typically have inventory, thus no cost of goods sold, and thus do not need to include Form 1125A with their tax return. Okay, so one thing I want to say here is that the cost of goods sold calculation adds all purchased materials or products for resale and any direct labor or any direct expense that was incurred in the manufacture, production, or acquisition of the products being offered for sale by the entity, and you got to add that to the beginning inventory. So this subtotal, the cost of goods sold available for sale, in other words, the cost of goods available for sale minus the ending inventory equals cost of goods sold. So when you see on a P&L, on a profit and loss statement, you see cost of goods sold, that's how you get to that number. So to reflect taxable income accurately, the partnership must determine the beginning and ending inventory values for the tax year. And inventory actually includes both finished and partly finished products. You have raw materials and supplies which the business has acquired for sale or will become physically part of the merchandise intended for sale. So this is kind of important. So so this is pretty straightforward. And so you're gonna need things like inventory at the beginning of the year, purchases, cost of labor, additional section 263A cost, other cost, total, inventory at the end of the year, cost of goods sold, and method used for valuing inventory, ending inventory, write down or subnormal write down of subnormal goods. So this is kind of important. Another form you might need if you are a partnership is Form 8890. So when we talk, as you can see on the screen here, this form actually spells out the limitation on business interest expense under Section 163J. So Form 8890, also known as the Business Interest Expenses Form, is for an individual, partnership, S corporation, or a corporation with business interest expenses. Besides, what we have seen in our research is that you will need to file Form 8890 if you or the partnership have a disallowed business interest expense from the previous year or an excess business interest expense from the prior or current year. So a partnership passes its income to the partners, as you already know. So the partnership must file IRS Form 8890 form. So, however, the partnerships must allocate excess taxable or business interest income to its owners. Okay, so this is kind of important. So one thing I want to say here is that the whole thing started when where Congress wanted to basically limit the how much business interest expense companies, including partnerships, can actually take. And one thing I want to say here is that when we analyze like if we were to look into your business taxes, your business interest expense, it's important that it makes sense from a quantitative point of view. Okay, and so basically when we talk about the data that you actually include in 8990, that data travels a lot of places, including it goes to Form 1065 Schedule B, questions 23 and 24. It also goes to a Form 1120S, Schedule B, questions 9 and 10, okay? It also goes into in the other forms tab in the basically in the 1040, 1065, and 1120S. And it also goes in the second other forms tab in an 1120. So you can see that when we talk about 1120, we are speaking about what? C corporation return, okay? And one thing I want to say overall here is that when we talk about the partnerships, basically all the forms I'm giving you, like Form 1065, Form like 1125A, Schedule K1, all those forms, those are for federal taxes, okay? If you're talking about state taxes, all the forms will be different, and every state is different, so we cannot really like monitor all the tax forms that state require. So you're going to have to call the revenue authorities to have a clear idea what kind of forms they require in your specific location. Another form that I want to pay attention to here is called the Form 8865, and basically this is an important form, and so this is essentially for U.S. citizens who have a stake in foreign partnerships. And Form 8865 is actually used to report controlled foreign partnerships, transfers to foreign partnerships, and acquisitions and changes in foreign partnership interest or disposition. Okay, and so this is kind of important. And one thing I want to say here is that this form is known as an informational return, meaning that you are required to report additional information to the IRS, but the form itself will not result in any additional tax or fees due to the IRS. So Form 8865 lets actually U.S. person in a controlled foreign partnership report their tax information to the IRS as required by the following IRC section. So you actually have all kinds of IRC section, Internal Revenue Code section. And what happens here is that when we talk about who needs to file Form 8865, this is any U.S. individual holding a minimum of 10% interest in a foreign partnership. So this is this person may be required to file Form 8865, particularly when this partnership qualifies as a controlled foreign partnership. And so this designation comes into play when more than 50% of the partnership's income is held by one or more U.S. person, okay? And so how do you file Form 1065? Well, there are several filing categories that U.S. partners may fall under, and your category will determine what section of this form you are required to file. So it's one of those things where you have to actually put in your number, your information, so they can actually see how they can actually classify you. And it's important to understand that if you, as a U.S. person, you own at least 10% of a controlled foreign partnership, you are becoming a category filer. And but one thing I want to say is that if a partner qualifies as a Category 1 filer during the tax year in question, no one will be considered a Category 2 filer. So, one person goes to another level in terms of the hierarchy, and he or she brings the whole crew. And one thing I want to say here is that when we talk about all the forms that I gave you, you need to understand that it's all about prioritization. It's all about how you actually file on time. And when in doubt, it's just better to use tax software. That way you are sure there are no mistakes, there are nothing at all. Now, one thing I need to say is that failing to file Form 8865 on time can have dire consequences. The severity will depend on which filing category you're in. So if you are a Category 1 or 2 filer, the IRS may impose a $10,000 fine for every tax year that you fail to file Form 8865 on time. So once you have mailed a notice of the future, you will have 90 days to file the requisite forms. This is really cool. One thing I want to say here is that when we talk about I want to do a quick recap here, okay? Thank you so much for your attention. I really appreciate it. So I want to do a quick recap. So in today's conversation, I spoke to you about partnership, all tax forms you need to sign. So I gave you the overview, and I sort of went through all the forms you need. So Form 1065, Schedule K1, Form 1125A, Form 8890, Form 8865. And so yeah, thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.